It's another trading session and another record high for the Dow and S&P 500. This week we will be getting the jobs report at the end of the week, and we also have third quarter earnings season kicking off next week. So joining me now is Stephen Guilfoyle of Sarge 986. Great to have you here today.
Thank you, Remy. The pleasure is mine.
Well, it's hard to believe, but we continue to see record high for the equity averages. In today's session, the Dow and S&P 500 are touching those record levels again. But given that we're at the beginning of the final quarter of this year and we have Fed rate hike expectations as well as expectations regarding tax legislation, what do you expect to see this quarter?
Well, typically we have about a 4% run over the last 4 months of the year, 3 months of the year. And we've already had that run, so I don't know if we can really count on it. It does feel, I'm net long, don't get me wrong, but I'm not sure if we have to take a little bit of a step back. I'm positive going forward. Let me make that clear. It's just that there comes times when you hit your target prices and you do have to take profits, and that's not just me speaking for other traders, it's me speaking for myself. I recently traded out of NVIDIA, which is one of my favorites and remains one of my favorites, but when you have too much of a profit in something, I believe that you're really tempting the fates when you don't act on your discipline. So I think other traders, even algorithmic traders, may actually act on disciplines here. And you might see in the early part of the quarter a little pullback as earnings get started.
And I do want to focus on specific sectors. Now, yesterday we started out with a very somber start given the tragedy that happened in Las Vegas. We did have the deadliest massacre in U.S. history on Sunday evening. And following that, we saw interesting trading in terms of gun stocks and casinos. So what do you make of what we're continuing to see in today's session?
Well, today's pretty flat, and that's really quite expected when you see the gun makers run like that. It's more of a play on the political climate than it is on anything else. It's certainly not based on fundamentals. When Donald Trump was elected president, all these stocks, well, most of them anyway, they came in a bit. And now when it looks like there might be legislation, at least in Nevada, where it becomes a little tougher to own a weapon, or if it becomes more expensive to own one, then everybody flocks to these weapons now because they think it might be their last chance. We all know from history that this is a stalemate. It's not going to be your last chance, but the emotional response is going to be there. And I'm not going to make a political statement on this. Obviously, I have a lot of history with weapons given my background. But I do believe that if these weapons were legal somehow, we don't really know that much, but if the automatic weapons were legal, and they shouldn't be, but if they were made prior to 1986, it is possible as long as you register them to own them. That's kind of ridiculous in my opinion.
Okay, Sarge, well, I do want to shift our focus on to geopolitical concerns. Now, we can't ignore the threat of North Korea, and we also have political concerns regarding Spain. Now, the European Parliament will be meeting tomorrow to discuss the Catalonia independence referendum, so we'll continue to monitor that. And we have Japan's election coming up on October 22nd. So how are you factoring all these global risk events?
Well, you know what it's going to do? It's going to put upward pressure on the U.S. dollar, which we have benefited greatly. Our earnings have benefited. Our economy has benefited. You've seen the manufacturing numbers. They're the best since 2004. I mean, the ball's been rolling the right way, and that's been thanks to a weaker dollar. Now, the euro, with this uncertainty, and with Prime Minister Abe's possible uncertainty, I think you're going to go through a couple of months here where you may go sideways in the dollar. I do believe the trend is intact. The dollar does ultimately go lower. You do one day see a DXY back in the 80s. I do believe that. But I think, at least for the next couple of months, at least get us through the October 26th ECB meeting. Let's see what Mario Draghi says there. Let's see if he pulls back his quantitative easing by about 20 billion euros. Let's see. We're going to have 3 weeks here of a little uncertainty.
And Sarge, before I let you go, I do want to get technical levels. What are you watching for the equity averages, and if you're watching any other levels as well?
Oh, it's getting tough. I mean, where are we now? 25.30. I mean, 25.29 was my level yesterday coming in, and you know what? It looked like I was way high. We ran up and closed right there, and now we're above it. Now we have a chance to show support at 25.29. If we hold this level here, I see 29.41 on the S&P 500, and then numbers in the 29.50s. I see a rapid run-up. I think the later part of the quarter, after we get through a little bit of this murky water, I think you could certainly see numbers between 26.25 and 26.50. That's another 100 points on the S&P 500. So like I said, I am medium to long-term bullish.
Well, those are some pretty lofty levels, but we'll continue to monitor them. So thank you so much for joining me today and for taking time out of your busy schedule.
Thank you for having me, Remy.